Ever get that feeling that big money, the big players in the market, see things you don't?
Hmm.
Like stock is just stuck, going nowhere, then suddenly, bam, it rockets up.
Yeah, absolutely. It happens all the time.
Well, if you've ever wondered how to maybe spot those moves before they happen, this deep dive is for you.
Definitely. Today, our mission really is to understand how this smart money, institutions with serious resources, how they often signal their moves in advance.
And crucially, how you, the listener, can potentially pick up on those hints.
Exactly.
So for this, we're looking at a guide on the on-balance volume indicator, OBV for short. It's from a YouTube channel, Upsurge Club.
Ah, yes, they do some interesting work. Their video explains how OBV uses price and, importantly, volume to reveal potential shifts driven by these larger players.
And why should you care? Well, look, this isn't about becoming a day trader overnight.
No, not at all. It's more about gaining a, let's say, sharper perspective on market dynamics.
Understanding why certain breakouts happen, maybe.
Precisely. And just feeling more informed about the forces really at play.
Okay, let's dig in. First up, this whole idea of smart money. The Upsurge Club guide draws a line between dumb money and smart money. Can you unpack that a bit?
Sure, so the guide frames dumb money, maybe not the kindest term, but it often refers to retail participants who might follow the herd, follow sentiment. It's less about smarts, more about typical behavior.
Right, sort of crowd psychology.
Exactly. And smart money, that's generally the big institutions. Think FIIs, DIIs, foreign and domestic institutional investors.
Okay, so what makes them smart in this context? Is it just the sheer amount of cash they control?
Well, that's a huge part of it, definitely. Their capital can literally move markets,
Oh.
but it's also their resources.
Huh.
The guide mentions things like, expensive research software, data platforms, stuff that's just out of reach for most individuals.
Gives them an analytical edge?
A significant one. They can dig much deeper.
So the core idea we're working with is that these institutions, with all that capital and analysis, they often start getting into position before a big price move is obvious.
That's the theory, yes. They tend to accumulate assets, like shares, quietly, discreetly.
Okay, and this is where the on-balance volume indicator comes into the picture, helping us see that accumulation.
Potentially, yes. OBV is designed to give us a glimpse into that phase.
All right, so let's get into the nuts and bolts of OBV. The Upsurge Club guide says it tracks volume flow relative to price changes. How does that work practically?
It's essentially a running tally of buying versus selling pressure based on volume.
Okay.
So if the price closes higher today than yesterday and volume is up, you add that day's volume to the OBV total.
Got it. Price up, volume confirms OBV rises.
Right. And conversely, if the price closes lower on higher volume, you subtract that volume from the OBV.
Makes sense. Down day with conviction, OBV falls. But what if, say, the price drifts up, but volume isn't really picking up?
Ah, that's a key point the guide makes. If the price goes up, but there's no significant volume increase backing it, well, the OBV might not rise much or at all.
So a lack of volume confirmation can be a signal in itself, like the move isn't strongly supported.
Exactly. OBV is looking for that conviction, and volume is the measure of that conviction.
Now, here's the really interesting part, I think. The guide points out OBV can actually trend up even when the price is just flat, moving sideways. What's going on there?
This ties right back to that smart money accumulation idea.
Okay.
If the price is stuck in a range, maybe buyers and sellers seem balanced, but OBV is steadily climbing. It suggests that, under the surface, buyers are more aggressive. Institutions might be quietly soaking up shares.
So this rising OBV, even with a flat price, could be an early warning, a sign that pressure is building for a breakout.
That's the potential insight, yes. It's like seeing the foundation being laid before the building goes up.
The guide uses DLF stock as a real-world example of this. Walk us through that case study.
Right. So Upsurge Club looked at DLF's weekly chart. For years, the stock was basically range-bound, trading between roughly 150 and 300, pretty flat.
Okay, years of going nowhere.
But during that exact same period, the OBV told a different story. It surged. It went from around 426 billion up to 1.48 trillion.
Whoa, hold on. Billion to trillion.
Oh, apologies. Let me check that again. Yes, 426 billion to 1.48 billion was the figure cited in the context of volume units, representing a massive relative increase, effectively tripling. My mistake on the units there, but the magnitude of the increase is the key.
Okay, a tripling. Still, a tripling of the OBV measure while the price is flat. That's Significant.
Hugely significant. It strongly suggested major buying activity happening quietly.
And what happened next with DLF's price?
Well, following that long period of apparent accumulation shown by the OBV, DLF eventually had a massive breakout. The stock price went up like 3 to 5 times from those levels.
Wow. So the OBV really was giving an early hint there.
It seems so. It signaled that significant buying pressure, likely institutional, way before the price chart showed anything dramatic. That divergence is the key takeaway.
That's a powerful example.
Yeah.
But the guide also mentions OBV itself can be pretty choppy, right? Volatile?
It can be, yes. Day-to-day volume fluctuations can make the raw OBV line jump around quite a bit.
So how do we handle that? How do we smooth it out to see the underlying trend more clearly?
This is where moving averages come in handy. The guide suggests applying a 100-period moving average directly to the OBV line.
Okay, so averaging the OBV value over the last 100 periods.
Exactly. It smooths out those short-term spikes and dips, making the overall trend direction much easier to spot. It filters the noise.
Did they show this with the DLF example too?
They did. Even during that sideways price action from 2015 onwards, applying the 100-period moving average to the OBV generated clearer signals.
Like buy and sell signals.
Yes. When the OBV line crossed above its 100-period moving average, that was a potential buy signal. When it crossed below, a potential sell.
And did those signals line up with significant price moves in DLF?
According to the guide's analysis, yes. They pointed to a buy signal around 116 before a rise to 261, then a sell signal around 187, and importantly, another buy signal before that really big breakout happened, taking it from around 164 way up to 824.
Okay, so smoothing the OBV with a moving average helps refine the signals and potentially improve timing.
It seems to offer a clearer picture of the sustained buying or selling pressure.
Now, the guide didn't stop there. It suggested adding another layer using multiple moving averages on the price chart itself for confirmation. Why do that?
Well, the idea is confluence. No single indicator is perfect, right?
True.
So if the OBV is suggesting, say, buying pressure is building, you then look to the price action itself using moving averages to see if the price trend is actually confirming that bullishness.
Okay, so it's about getting agreement between the volume indicator, OBV, and the price trend indicators.
Precisely. It adds a layer of validation, potentially increasing the reliability of the signal.
And what specific moving averages did they suggest for the price chart?
They used a combination of 3. A short-term 9-period, a medium-term 30-period, and a longer-term 100-period moving average.
Right. And how do they work together for confirmation?
For a sell signal confirmation, you'd look for the 9-period MA to be below the 30-period, and the 30-period to be below the 100-period, all lined up downwards.
Showing a clear downtrend across multiple time frames.
Exactly, and the implied buy signal confirmation would be the reverse. 9 above 30 and 30 above 100, everything aligned upwards.
Got it. So OBV hints at smart money. The moving average on OBV clarifies its trend, and the moving averages on price confirm the price trend itself. That's the system.
That's the strategy outlined in the guide, yes.
And they stress this isn't just for, say, Indian stocks or weekly charts.
Not at all. They made a point about its versatility. It can potentially be used in equities, commodities, different markets.
And different time frames, too, like intraday.
Yes, intraday, swing trading, longer-term positional trading. The principles can be adapted.
Did they give examples of this adaptability?
They did. One was Nifty Futures on an hourly chart. The OBV apparently gave a sell signal near a high right before a pretty sharp, like 10% drop.
Interesting. Before the news.
Yeah, the guide mentioned it happened even before reports of FII selling became widespread. An early warning, perhaps?
Any other examples?
Maruti stock was another one. A sell signal on OBV, later confirmed by that downward alignment of the 9, 30, and 100 moving averages on the price chart leading into a downtrend.
Okay.
And they offered a tip for shorter time frames, like intraday, maybe increase the OBV's moving average period, say, to 200 to focus on stronger momentum shifts.
Right. Tweaking the parameters for the time frame. Makes sense. What about commodities?
Yeah, they touch on those too. Crude oil mini futures apparently showed a recent OBV buy signal, confirmed by the price moving averages lining up bullishly, followed by a price rise.
And silver.
Silver showed the opposite. An OBV sell signal, later confirmed by the price MAs turning bearish, preceding a significant drop.
So it seems potentially applicable across the board, with adjustments.
That's the argument presented, yes. The examples aim to show that broad applicability.
Okay, so let's try and boil this down. If you're thinking about using OBV to potentially spot these smart money moves early, what's the absolute key takeaway?
I think the core insight is that OBV can offer valuable clues about institutional activity by looking closely at that relationship between price and volume.
Especially those divergences, right?
Yeah.
Where price is flat, but OBV is moving.
Exactly. Those divergences are key. And then using a moving average on the OBV itself to clarify the trend.
And then seeking confirmation from moving averages on the price chart.
Right. It's that combination. But, and this is important, the guide also stressed, and is generally true, OBV works best with other confirmations. It's a piece of the puzzle, not the whole picture.
Definitely need that broader context. Okay, this has been really useful digging into OBV like this.
Good stuff.
So, for you listening, as you think about how you analyze markets, maybe consider how tracking volume alongside price fits in. Could it add another dimension?
Yeah. And what other tools or techniques could complement these OBV insights? It's worth thinking about how different indicators can work together.
Absolutely. And we'd love to hear from you. What are your experiences with volume indicators like OBV or maybe others?
Definitely. Share your thoughts, any questions you have. Let's keep the conversation going. Exploring these ideas together is how we all learn more about navigating these markets.